Max Keiser. Hello, I'm Max Keiser. This is the Keiser Report, Keiser Report, Keiser. You know, sometimes I hear the Doppler effect. I don't know what that's all about.
We won't go there, but we're going to talk about some good news first. But that good news is actually leading ultimately to bad news. There's a bad news on the back of the good news, but we're going to start with the good news first. And here's some good news for our gold bugs out there, because I know they have been kind of sad or, morose these last few years as gold has traded within a tight range for 4 or 5 years, doing nothing while Bitcoin's stolen all its glory. Well, it could be back to Bitcoin-like days soon. Bond King Jeff Gundlach says gold could rally $1,000. Of course, Bill Gross is the Bond King, but this guy also now goes by the Bond King. But the CEO of Double Line, also known as the Bond King, is once again attracting the attention of gold investors as he sees the yellow metal at a critical juncture. Quote, "We see a massive base building in gold. Massive. It's a 4-year, 5-year base in gold. If we break above this resistance line, one can expect gold to go up by $1,000, he said during the 2018 Maudlin Economic Strategic Investment Conference, according to a recent recap from Steve Blumenthal, Chief Investment Officer at CMG.
That would take it up to $2,400, $2,500 an ounce. And I saw that Jeff was meeting up with Peter Schiff. Just a few months ago, they had lunch at Jeff's house in Los Angeles. They're talking big gold things there.
Yes, Peter Schiff. He likes his gold cufflinks. He wears those a lot. And
is Monet gold? I heard somebody say that they saw Peter Schiff on a cruise recently trying to sell his 24-karat gold cufflinks to people on the cruise. So he really is a personification of always be closing. Peter never stops selling. He never stops closing. That's what makes him great.
Remember, I promised you some bad news. I know Max likes some bad news in there in every single headline. So the bad news behind it, why this so-called new Bond King, Jeff Gundlach, sees gold rising by 1,000. The most prominent factor behind Gundlach's bullish gold outlook is a weaker U.S. dollar. In his presentation, he said he sees the U.S. dollar continuing to push lower in 2018. There are other economists out there also seeing that the dollar is going to weaken. It's broken out of a trend. It's going down again, and it looks like it'll continue to go down.
Well, there are 3 trades that have been wrong for 5 years. One is that the dollar is going to crash. 2, that gold is going to 2,500 in the very short term. And that 3, the bond market's going to crash. All those 3 trades have been absolutely wrong for 5 years. And they've taken many people out on a stretcher. John Paulson, by the way, big hedge fund manager, he just closed his gold position. He had a gold fund. He was a big gold investor. He bought a ton of gold, tons and tons of gold. Didn't go anywhere. He closed it out. So is Jeff going to be the guy who calls it right? Well, let's see.
That is a classic contrarian position at the moment. When somebody like Paulson dumps his gold, he capitulates. That's a good point.
Oh, yeah. We've had a few contrarian moments like that over the past 3, 4, 5 years.
So here's a headline from Miss Shedlock, and it's Rosenberg says buy gold, buy oil, buy commodities. Economist David Rosenberg expects the U.S. dollar to fall. His recommendation is to buy commodities. Mish agrees, but he says just gold, forget oil and all that stuff. But he points to his U.S. dollar chart that he uses, and this goes back to 2001. This is the 5 years that you said that everybody's been saying the dollar will fall. Well, in fact, you clearly see it's broken the trend, and the trend is now down. Mish's look at this is that it's going to hit 80 on the dollar index. At the moment, it's about 90.
The all-time low is around 70. But as far as hyperinflation goes, or return of inflation, one interesting side note would be how the money velocity's really been down to 0. That means that all the money that's been printed is building up on the balance sheets of these banks in an attempt to keep themselves from declaring insolvency. Once that dam breaks and that money starts to come back into the economy, the central bank says that they can just raise interest rates gradually and that they can manage the whole quantitative easing nightmare by reverse quantitative easing. Historically, that's never, ever happened. Once inflation genie is out of the bottle, it becomes a rampant high inflation, hyperinflation. So yeah, gold and oil could do very, very well in that environment, and we're overdue for that type of cyclical turn.
The other crazy thing that's been going on in the U.S. Here's some good news, and which could lead to more bad news on the downside, on the other side of this. And that is the IMF forecast. IMF spots trouble ahead for the global economy after 2020. So up until 2020, they're saying things are going to be great. And especially in the U.S. They've revised up their forecast for the U.S. up until 2020. You know what happens then? An election. Whether or not Donald Trump is in jail by then, we don't know. But if he's not in jail, then it looks like he could be reelected based on the IMF forecast. Who knows what will happen to MSNBC and Rachel Maddow.
Well,
but they could lose their minds even more.
As I've been saying now since day one of the Trump administration, that a 2020 election victory is a high probability. And these numbers just underscore that as being the probable event that we can look forward to in 2020.
Well, we might have to have a coup. The second successful coup in America. We've only had one, and that was in Wilmington, North Carolina. The second one might happen because of this. The International Monetary Fund predicted the world's economy's strongest upswing since 2011 will continue for the next 2 years, but warned the seeds of its demise may have already been planted. The fund on Tuesday left its forecast for global growth this year and next to the 3.9% it estimated in January, and raised its outlook for the U.S. as Republican tax cuts take effect. So all the seeds of disaster that they see coming in 2020 are mostly U.S. based. It's the tax cuts and the debts and the deficits that will emerge because of that, but also the trade war going on with China.
Look, North and South Korea are declaring a truce, and that war that's been going on for decades coming to a close. If they open up North Korea, it's like opening up China. During the World Trade Organization under Clinton, it ushered in an enormous boom. If you're going to open up North Korea to development and all kinds of interesting American corporations going in there and building infrastructure projects, and Trump can take credit for that happening, he takes full credit, and Dennis Rodman, of course, are the architects of the peace between North and South Korea, you're going to have a huge boomlet. That's good news on the headline, right? That finally the two Koreas are actually declaring peace. I don't think a peace was ever really declared back in the 50s. So now they're actually going to have a peace. That, however, could cause Rachel Maddow sorts on MSNBC. Imagine Donald Trump winning the Nobel Peace Prize. They would have a total breakdown and demand we nuke somebody. Like, they would go over the top. They would truly just, like, what would happen? He watches cable news all day long, so he's likely to respond to that as well. Who knows? Maddow is a dancing chicken. You know, you put a quarter in the machine, and she'll do her little dance around the hot plate, screaming about Trump, all for nothing. The sound and fury signifying nothing is something that I wrote a few years ago, and then Shakespeare stole it, of course. So going back to the story about the IMF and what they see as possibly going horribly wrong after these 2 years of great growth, the IMF warned the expansion could be derailed if countries resort to tit-for-tat trade sanctions. Obviously, they're talking about the U.S. The first shots in a potential trade war have now been fired. IMF chief economist Maurice Obstfeld said in a forward to the fund's outlook, reiterating the IMF's warning earlier this month that the global trading order is in danger of being torn apart. Conflict could intensify if fiscal policies in the United States drive its trade deficit higher without action in Europe and Asia to reduce surpluses, which is quite interesting that he actually mentions that, you know, Europe has Germany, namely, has huge trade surpluses, and they've got to do something about it too, not just China. This was what post-Bretton Woods was supposed to solve, that they didn't want these trade imbalances, not just the huge trade deficits like America has, but it was equally as corrupt and corrosive to the global trading system to have massive surpluses like Germany and China have. Safdien Ammous wrote this book, The Bitcoin Standard, which is now hugely popular in economic circles around the world. Bitcoin is proving to be the new gold standard. It'll usher in a global period of trade harmony as the globe comes into the crypto sphere. And when I come back after the break, I'll be talking to some very important crypto people. But in the last minute, I want to turn to this final headline about a further warning about what could possibly go wrong with the outlook beyond 2020, and that is, of course, debt.
The guardians of the global economy face challenges beyond trade, including the end of years of easy central bank money and a world debt pile that has climbed to a record $164 trillion. Financial markets have been choppy this year, with the U.S. stocks down slightly after strong performance in 2017. Now, you had pointed out when you were talking to Mitch Firestein just an episode ago that the central bank balance sheets, he pointed out the U.S. Fed, and you saw the little taper at the end is just a little tiny blip down. And the fact is that we've hardly tapered. The rates are hardly up. But in a relative
on a global basis, their money's been flooding into it, and it's a complete repudiation of this whole idea. You can't taper a Ponzi scheme. And Bitcoin is ready to take over the world. And I talked to Arthur Hayes in the second half.
Again, Max, the debt is $154 trillion now. That has doubled since the financial crisis. So we have this huge debt load. The day of reckoning, whether or not Trump, whether or not the masters of the universe, whether or not the Trump administration, whether or not Jerome Powell, whether or not these sort of guys, the central bank, you talk about the Bitcoin standard. Right now, we're still on the U.S. dollar standard. Whether or not they could keep it going for another 2 years for Trump to win another 4-year term is up for whatever. But by gold.
Well, I predict yes, they will. I've said it for years. It's a hands-down certainty. Well, we got to take a break. Arthur Hayes is coming up talking about Cheap Trick, famous band from the 70s, MaxCoin, and BitMEX. Don't go away. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Arthur Hayes, CEO of BitMEX. Arthur, welcome.
Thanks for having me.
Great to see you. Longtime friend and associate, and we've been talking to you for a long time. One of the early folks in Bitcoin and the Bitcoin exchange. You are the CEO of BitMEX. First, tell us about BitMEX. What's going on there?
So we are now the #1 exchange in the world in terms of average daily trading volume. We trade financial products. So leveraged financial products. Our, key product is a 100 times leveraged Bitcoin versus US dollar swap. That is the most liquid instrument traded globally.
Right, and it's in Hong Kong. And so you've been navigating through this space now for a few years. What have been some of the biggest challenges so far for you?
Getting liquidity. I think that's, for any exchange owner, that's the hardest challenge. And thankfully, we've been, right place, right time with the derivatives space and caught the 2016, 2017 wave. And it's been very good for us so far.
Wow. So now you've got a product that's 100 times leverage. So, it's 100 times leverage.
Exactly.
That's the only way you can say it. Right? I mean, that's a pretty dicey product. What is the daily volume?
So that product does between 2 to 4 billion US dollars of trading volume every day.
Wow. And so your exchange, like all the exchanges out there, must be feeling pretty good. There are two businesses in crypto that are seemingly very well positioned, mining and exchanges. And you've got the most liquid exchange out there. And we're seeing a lot of mainstream interest in these exchanges. Goldman Sachs, I believe, is buying into Poloniex, which is one of the exchanges. So are we going to see more mainstream push into these crypto markets? And as a follow-up, they seem to be both trying to be bad-mouthing the space and encouraging a lot of regulation, but at the same time trying to get into the space. So what's going on there?
I think at the end of the day, it's revenue accretion to the bottom line. So if you have a industry where in certain domiciles there are more registered accounts on a crypto exchange and on the domestic stock market, and the fees are multiples higher than what a traditional broker exchange charges, and the demand is insatiable, then as a financial institution, you have to get involved. And regardless of what your personal view about the long-term viability of Bitcoin is, I mean, banks sold XIV, short volatility ETFs. They don't really care what the underlying product is if they can make money.
Right. The market's there. They're going to sell. They're going to accommodate the market. If the demand is there, that's what they'll do. And so the demand for Bitcoin is there. The demand for crypto is there. They have to respect it. They can't pretend it's not going to be here for now. It's changed the landscape, and they've got to participate. And so where were you before BitMEX? Let's give us a little of your background.
So I used to be a ETF market maker at Deutsche Bank and Citibank on the Hong Kong and Singapore Stock Exchange. So I made markets in a variety of number of ETFs around the world, and I did that for about 5 years. And then, thankfully, I got let go from my job at Citibank and started trading Bitcoin full time, and then parlayed that into opening up BitMEX in 2014 with my other two co-founders.
Wow. So, and what was it about the Bitcoin technology that struck you, really got you hooked?
I think it was a possibility of completely changing the financial services industry, and you really only get a chance like this once every 200 or 300 years for a shift in how people perceive and use money. And obviously, vast fortunes have been made and lost during these transitional periods, and I obviously wanted to try my hand at it.
What do you think is the thing that the academics are missing? You read big academics like Paul Krugman and others, and they're very critical of Bitcoin, and yet the industry is growing by leaps and bounds. You've established that there's a huge business for this. What are they missing, in your view?
I think that they don't really understand any of the financial products that are out there, let alone Bitcoin. So there's so many economists that barely understand how fractional reserve banking works or how central banks work. They think that printing money will solve economic problems. That's obviously not the case. So if they believe in these fallacies, why should we think that they have any idea what's going on in the cryptographic currency space?
Right. Various states, of course, are getting nervous because it does cut out the middleman. It cuts out the state. You could say, cuts out central banks. You've got peer-to-peer value exchange without any intermediary. And so this is a threat to, as you say, the system that's been around for 200 or 300 years. Where are we in that cycle? Are they going to win this battle? I think, the answer is probably going to be no, but how do you see that battle shaping up? What's the next big battle that we will see? We've seen states come out and try to ban it. And we've seen regulatory initiatives, we've seen the SEC, we've seen the CFTC. So what do you think is the next 6 to 12 months? What do you see coming down the pike?
Well, I think that cryptocurrencies will exist in tandem with traditional fiat currencies. And at the end of the day, humans are lazy. And so if you make the traditional system work and is convenient and people can use it, they have no desire to try something new. Look in China, right? They have WeChat Pay. Anywhere in China, from a taxi cab to a person selling you a piece of fruit on the street, everyone uses this mobile app and this mobile money. And it's so convenient. It's way better than anything else in any other country I've ever been to. So if I have WeChat Pay, why do I need to go out and try to figure out what a Bitcoin wallet is or Monero or any other these currencies? I have a system that actually works for my daily needs. And so I think that's where we're going to go, is you're going to see financial services actually start responding to what people in this day and age actually want, which is convenience, mobile money, and that means that it'll be coexisting with Bitcoin and other cryptocurrencies. I don't think either one is going to replace the other.
Let's talk geopolitics for a second. So you recently made, and by the way, let me point this out to folks, that BitMEX publishes excellent research. So this is sorely lacking in the crypto space. You're taking high-level banking institutional style research that the industry is accustomed to, and you are applying it to crypto, and you're coming out with some of the best research really anywhere out there. And you wrote a report recently that you said that about N+, and how sanctions on Russia might actually end up making them a cryptocurrency mining powerhouse. Explain.
So our research analyst has been researching how captive electricity sources can be put to good use Bitcoin mining. So imagine you have a massive, aluminum smelting facility in the middle of nowhere, and they needed to put some power next to this facility to, power the smelting of aluminum, which is one of the most energy intensive, industrial commodities that's produced. And so usually these electricity production facilities are in remote areas, not close to any population centers. So if now, say the price of aluminum collapses, you have this captured electricity that's not being used, well, Bitcoin mining can actually put an economic productive use to this electricity generation. And that's what we're seeing in China and in Mongolia and possibly Russia and other places where you have a lot of electricity and low use from traditional industrial players.
Well, so the sanctions apply to, was it Rusal? It's the aluminum powerhouse in Russia. And so if the sanctions cut into them, they can convert over to Bitcoin mining.
Exactly.
And they can become a powerhouse.
Exactly.
So that could be huge. Well, I mean, so by dint of necessity, the mother of invention, Russia could be pushed into becoming a crypto powerhouse at a time in the world history when crypto dominates and replaces fiat.
Possibly, or it could just be another way to transact globally in the financial system, and depending on whether or not they think that is worth their while.
Okay, let's change gears. You did some great research on Ripple. Your thoughts?
I think that Ripple is misunderstood in terms of what it is. People think that it's a cryptocurrency akin to Bitcoin, but from first blush, it appears that it looks as if it's a centralized system for moving value around. Now, that's not inherently a good or bad thing. It's just that I think a lot of people don't really understand what Ripple is trying to achieve. And then secondarily, a lot of people look at Ripple partnering with XYZ financial institution and think that the actual token is going to be used in that particular application, but usually it's the Ripple Corporation actually doing outside contractual work, building some sort of Swift replacement system, and the token XRP has no bearing in that relationship.
Do people commonly make that mistake by confusing the consulting services of Ripple, the corporation, and the token?
Absolutely.
And so would you say the token where does it place on the spectrum of valuation? Do you make a call? Do you say it's overvalued or undervalued? Or
I don't care. I guess trade volatility. So at some points it's undervalued, at some points it's overvalued. Really, it depends on how the market's going to react to a particular piece of news. I think no one can come in here and tell you there's a fundamental value that they can build a model for any coin. So anyone who says, oh, this coin is overvalued, this coin is undervalued, maybe on a short-term technical trading basis, but on a 1 year, 2 year basis, no one has any idea.
When are you coming out with your report on MaxCoin?
I might need a few $1 million for that first.
Oh, okay. I understand. Well, I heard it was undervalued, but that's my research. But I'm a slightly have an opinion about it. So let's talk about Ethereum. It's the second biggest cryptocurrency after Bitcoin. They are about moving from a proof of stake instead of proof of work. So explain the difference between these two models, and what's your thought about that?
I mean, so proof of work is using actual physical real-world expenditure of resources to validate blocks, which solves a number of cryptographic problems in the Byzantine generals problem. Now, I'm not a cryptographer, I'm just paraphrasing here. Proof of stake is people staking that they own a particular portion of coins and using that to validate blocks. Now, there are pros and cons on this, and where Ethereum stands now, I think it's going to be very difficult for them to completely remove proof of work from their consensus algorithm. Not to saying it can't be done, but I think it's a lot more difficult than what people imagine. They think, okay, Vitalik and co have said 2018, we're moving to proof of stake, and they take that as gospel. Maybe that'll happen, but the road to that point is going to be very difficult.
Okay, fair enough. A very diplomatic answer. So again, you are really just in the business of making markets, and you don't want to take, the opinions, you let the market decide.
Absolutely.
Right? So, you put out some excellent research, which is great. I see a lot of the exchanges in the business seem to be moving to Malta. Malta's attracting a lot of the big exchanges and a lot of traffic. What's behind that, and would you ever consider it?
So, at the end of the day, we want to be wanted in a particular
like the Cheap Trick song. I want you to want me.
Absolutely. We have all these businesses generating high-paying jobs, paying taxes, and at the end of the day, being snubbed by financial institutions and governments. When at the end of the day, governments should be supporting an industry that is employing people and paying them a good wage. And
let's explore that for a second. So you want to go where you're wanted. In other words, you've got huge business, you've got huge revenues, you've got jobs. So you can jurisdiction shop and go where you're wanted. And because the idea that these governments are going to either work individually or gang up and get rid of this threat as they perceive it, cryptocurrency, is false. They will fail. So you're going to go where you can get the best reception. And so is it game theory on a big geopolitical scale? In other words, the only way that this isn't going to work is if all of these governments work together. But according to game theory, at least one of them will break ranks and say, you know, we're the underdogs. We want this money. We want the business. We'll take the business. To heck with you guys. We want it. We want the business, and they'll run away with it.
I mean, I don't think there's a uniform governments believe X. It's a spectrum in terms of, you know, what their particular socio-political situation
If they did,
is.
we'd live in a era of peace.
Exactly.
And love and harmony. But they don't.
Exactly.
It's always war.
So there is obviously a government that wants a high-paying jobs in their particular jurisdiction or a territory, or, you know, take the United States, a particular state that's lobbying for a company to move their headquarters from California to X, right? And then they'll throw all sorts of inducements to get them there. It's the same thing with, you know, on the national or, you know, federal, global level. There are jobs to be had. There's innovation to be made. Do you want your country to be in the next phase of the development of financial services for humanity, or do you want to stay back in, you know, the 70s and 80s? And, you know, governments will self-select themselves on the particular pendulum, and the jobs will go to the place that wants to be innovative.
Well, excellent. We'll leave it there. Arthur Hayes, thanks for being on the Keiser Report.
Thank you very much.
All right, well, that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I'd like to thank our guest, Arthur Hayes, CEO of the one and only BitMEX. If you want to reach us on Twitter, it's Keiser Report. Until next time, bye, y'all.